Welcome to the weekly market recap with SC Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka's digital payments to government institutions have more than doubled in 2024, reaching a staggering 1.78 trillion rupees. A 104% increase from the 828 billion rupees recorded in 2023. Presenting the data in Parliament, Prime Minister Harini Amarasuriya highlighted the significant growth, attributing it to the government's ongoing efforts to digitize payments and streamline financial transactions. According to the Prime Minister, Sri Lanka Customs led the way, collecting 1,100 billion rupees through digital transactions. The Inland Revenue Department followed with 618 billion rupees, while the Sri Lanka Ports Development Authority and the Employees Provident Fund earned 19 billion rupees and 41 billion rupees respectively. This surge comes as Sri Lanka moved towards a fully digitized payment system with the Government Pay platform officially launched on February 7th. The initiative aims to bring all government transactions under a single digital platform, enhancing transparency and efficiency. The Indian government's expertise in digital payments, particularly through its unified payment interface, has played a role in shaping Sri Lanka's digital payment infrastructure, with technical assistance and knowledge-sharing efforts underway. To further accelerate digital adoption, a presidential mandate signed on January 29th has instructed state-owned enterprises and government institutions, both with and without existing ICT facilities, to be integrated into the Government Pay system. Institutions such as Sri Lanka Customs, the Inland Revenue Department and the Sri Lanka Ports Development Authority are among those set to be onboarded in the near future. With these advancements, Sri Lanka is making significant strides towards a cashless economy, ensuring faster and more secure transactions for businesses and individuals alike. Sri Lanka's exports surpassed $1.3 billion in January 2025, setting a strong start for the year. According to Sri Lanka Customs, merchandise exports alone amounted to just over $1 billion, reflecting a 3.5% increase compared to the same period last year. Breaking it down by sector, agricultural exports showed the highest growth, rising nearly 15% to $259 million. Industrial exports saw a marginal increase, reaching $746 million. Meanwhile, service exports surged almost 38%, bringing in $329 million. As a result, total export earnings for January stood at $1.33 billion. Among key export categories, apparel and textiles recorded a 21% year-on-year increase, generating $460 million. However, exports to major markets including the US, UK and the EU saw a notable decline. Tea, which accounts for 12% of Sri Lanka's merchandise exports, saw a 2.6% increase in earnings, reaching $113 million, supported by a 3.2% rise in export volume. Coconut-based products also performed well with a 12% increase. Meanwhile, spices and essential oils recorded impressive growth, up by 33%, driven mainly by pepper exports, which skyrocketed by over 106%, and cloves, which saw an extraordinary 649% surge. Food and beverages exports grew by 23%, supported by strong demand for processed food, while diamonds, gems and jewelry earnings rose 28%. The boat building sector also recorded a 33% increase. However, not all sectors saw gains. Rubber and finished rubber products dropped by 8%, with tire and tube exports plunging nearly 34%. Electrical and electronic components saw an 8.9% decline, mainly due to lower exports of insulated wires and cables. Seafood exports also fell, dropping by 23% year-on-year. Looking at Sri Lanka's top export markets, the United States remains the largest destination, accounting for 23% of total merchandise exports. Exports to the US increased by 18%, reaching $260 million. India, the second largest market, saw exports surge by nearly 44%, totaling $82 million, driven by strong demand for pepper and other commodities. Meanwhile, exports to the UK grew by nearly 18%, while shipments to Pakistan saw a 25% increase. Overall exports to India and Pakistan together accounted for 8.8% of total merchandise exports, recording a 42% growth compared to last year. Sri Lanka is set to face significant short-term liquidity pressure in 2025 with 3.8 trillion rupees worth of treasury bills maturing within the year. The Finance Ministry, in its medium-term debt management strategy, has highlighted the need for precautionary measures to manage these obligations. The report also noted that 21% of the country's total debt will see interest rate adjustments in 2025, making it vulnerable to potential rate increases. However, 97% of Sri Lanka's debt remains in fixed-rate instruments, providing some stability against fluctuations. By the end of 2024, the country's debt-to-GDP ratio had fallen to 98%, down from 104% the previous year, following the completion of debt restructuring. The total outstanding debt stock stood at $100.3 billion at the end of last year. Looking ahead, the government plans to shift towards a more domestic-oriented financing strategy. The debt management plan for 2025 to 2029 aims to maintain an 80-20 domestic to external financing ratio, with an increased focus on issuing medium to long-term treasury bonds. There's also a move to secure external funding through concessional loans with fixed interest rates, reducing reliance on short-term instruments. With $18 billion in total debt maturing in 2025, including $13 billion in treasury bills and $3 billion in treasury bonds, Sri Lanka's debt strategy will be critical in maintaining financial stability in the coming years. Sri Lanka's real estate sector is seeing a major transformation, with high-rise living becoming the dominant trend, especially in urban areas where land is scarce and population density is high. Speaking at the Lanka Property Web Show 2025, research analyst Chamala Tevaraperuma highlighted the strong investment potential in residential apartments. Over the past decade, high-end property prices have surged by 79%, reinforcing the economic viability of vertical living. Currently, just 6% of the Sri Lanka's landmass accommodates 28% of the population, a factor driving the rapid expansion of high-rise developments. Over 37,000 apartment units have already been introduced to the market, with another 8,000 expected by 2027, 94% of them concentrated in the western province. Meanwhile, Colombo Port City is gearing up to offer off-plan condominium sales by mid-2025, with plans to house over 273,000 residents. Local buyers will have access through funds held in domestic banks. Apartment prices vary significantly, with high-end luxury units starting at 59 million rupees, while semi-luxury options are available from 18 million. Analysts expect this upward trend in demand and pricing to continue, making high-rise living the new norm in Sri Lanka's urban landscape. Sri Lanka's tourism sector is maintaining its strong momentum in 2025, with over 175,000 tourist arrivals recorded in the first 20 days of February. This marks a 15% increase compared to the same period last year. According to the latest data, 175,436 tourists visited the country between the 1st and 20th of February. This brings the total arrivals for the year so far to 428,197, reflecting a 19% year-on-year growth. Sri Lanka welcomed 61,667 visitors in the first week of February, followed by 63,164 in the second week. However, arrivals dipped slightly to 50,605 in the third week. Comparing year-on-year performance, Sri Lanka saw 218,350 arrivals in February 2024, a significant increase from just 107,639 in February 2023. The daily average of arrivals has also improved, rising from 7,644 in early February last year to 8,772 this year, an 8% increase from January's average of 8,153. India continues to lead as Sri Lanka's top source market with a year-to-date total of 68,668 visitors. Russia follows with 56,376, the UK with 40,515, Germany with 12,393 and France with 11,187 arrivals. Tourism authorities remain optimistic about achieving the ambitious goal of 3 million visitors and over $5 billion in earnings for 2025. Industry experts believe that ongoing strategic marketing, enhanced infrastructure, increased airline connectivity, and improved safety measures will further drive sustainable growth in the sector. In 2024, Sri Lanka recorded 2.05 million tourist arrivals, generating over $3.2 billion in revenue, a remarkable 52% increase compared to the previous year. Let's take a look at this week's Treasury-bill auction results. With the recent Treasury-bill auction, the 91-day T-bill rate stands at 7.57%, down by 4 basis points. The 182-day T-bill rate stands at 7.87%, down by 3 basis points. And the 1-year day T-bill rate stands at 8.35%, showing down by 1 basis points compared to the previous week. Thank you for watching, and we'll be back next week.